Today, we're going to be discussing how builders are pulling back, even though we have a housing shortage.
Well, we do have a housing shortage, right? I mean, so why is that?
Well, building right now is slowing and it's not accelerating. So you would imagine that, they would be picking up steam since we need so many houses.
But they're not. Like, builders would build if they can, right? I mean, that's their job, right? Like who doesn't want to build? That's the issue. It's just the price, construction costs and the interest rates, and you don't build unless somebody can buy.
Right. The math has to work.
Right. And the math is the customer.
Yeah. Yeah.
So builders can build, but the last thing they want to do is sit on inventory.
Because they learned their lesson in 2008 when they had way too much inventory. And so now I think they're doing it more in, sections.
Well,
they're building.
You went out to a subdivision last week or a couple weeks ago, and there's quite a bit of product there, right?
There is. There's product and there's incentives. But I will tell you that, the incentives were better November, December. They were offering a 4.75 rate. Now that rate has gone up to 5%. And they were offering a 3.75 rate. And that rate has went up to 4%. And they were only keeping that through the end of February. And then they're going to be raising it again.
4% is still really good. That's like 2 points less. And so let's figure that. If it's a $500,000 home, 2% is a lot.
Yeah, I think it was about $800 savings for my client, and the home was around,
right?
Yep, and it was around $400 and some thousand dollars.
Okay, so call that $10,000, right? So somebody's eating that, and it's just it gets baked into the builders' incentives and their sales costs, right?
Yeah, but they also are, like I said, the incentives were better, and then they're getting not as good. So you have to keep that in mind when you're looking at that as a buyer. You have to realize that means the market is picking up. That's why they're raising their rates.
Well, maybe, or could be, a marketing tactic where they're just offering on one or two houses and create the urgency. But the reality is this: if a builder is having to do those kinds of incentives, that's not good. That eats into profit. And that's actually the real issue here is, so if it costs 8 or 9% construction debt on the interest rate on the construction to, let's say, to build something, and then you're getting whacked on the, we'll call it the exit or the customer, and they have to bake that into their sales and marketing costs, they're going to pull back. Because at the end of the day, why would you build? All you're basically doing is keeping all the subcontractors in business and all that kind of stuff, there is strategy to that. I've actually been through cycles before where that's happened, where you don't want a framer to go out of business that you've used for 5 years, right?
Right.
So if you're communicating with them and they do, they're your lifeblood, right? Because what you're doing is you're buying land, going to the bank, getting financing, and building out a subdivision, or let's say, but you need all those subs to be able to do the work, and that there has been some issues there. A lot of these subs have maybe they had too much overhead. Maybe, maybe they're just not big enough. They're kind of mom and popish, and they haven't been able to make it. Right. And so it's a fine balance if you're a general contractor to be able to manage all those subs too. But the reality is this: land really hasn't gone down that much. Construction costs and construction debt hasn't really gone down that much. And even with all this, new stuff coming out of the administration, the interest rates are still 2% off of, whether or not people are going to be able to buy a new home or not. Listen, if you own a few hundred units but can't seem to break through to thousands, I know exactly what holds you back. It's not that you can't find deals. It's not that you're not working hard enough. The problem is you're still trying to do everything yourself. And that approach that got you to a few hundred units, it's exactly the same thing that's keeping you stuck right where you are. So here's what nobody tells you. Scaling to thousands of units isn't about working harder. It's about building the right team and structure and systems. So I manage about 10,000 units and 300 people just in about 3 hours per week. And I want to show you exactly how it works. I'm opening up my boardroom for one day and to just 19 investors. You'll get my complete playbook, the org charts, the systems, how I raise capital, how I structure my team, everything. Plus, you get a 30-minute private call with me after I review your application. That call alone is going to be worth more than the investment. Click the link to apply below.
Yeah, and you have to look at, financing is a huge deal for them right now because their cost of capital, no matter what they're offering in rates, they're eating that. So you have to, think about that when you have to understand that when they're looking at whether they should continue to build or not, whether it makes sense.
Well, obviously, if you're Pulte, Lennar, something like that, your cost of capital is really low. That's a huge competitive advantage. But if they start building a home and that home sits for 6 months, 8 months, 9 months, it just crushes the profit. Right? Mm-hmm. Because what they want is they want to build 3 model homes and have somebody come in and say, I want this one with, beige carpet. And then they build it. And now the homeowner actually has the wait time. What's risky is when they actually start building these houses and, it's like you build it, they will come model, right? That's how builders get crushed. And so, they're kind of in this, chicken and egg issue right now, where do you start something, build it, and then hope you have a buyer? Because every single month that it's done, your profit margin's just getting crushed. You got your cost of capital, because you're financing that. So there's still a construction loan on those deals. And the only way to pay all of that off is the homeowner.
Right.
Whoever's going to buy that house is going to have to pay it off. So they pay off the builder, they pay off the construction loan, they pay off all that stuff. And so, the wait time, the lag time, and the construction costs is precisely why people are kind of pulling back right now.
Yep. And these phase developments are a real thing where instead of building a whole community, they are building in the chunks, right? And that way, it really protects them from sitting on all those homes like they did in 2008.
Yeah, but then there's little pockets that are crushing it. Like in Phoenix here where we live, there's the Taiwan semiconductor plant, right, which has got thousands of new employees. And you guys just look it up. It's super impressive. We fly over it every time we come into Deer Valley, which is where we park. And I'll tell you what, it's massive. And they just keep buying hundreds, if not thousands of acres all around there. And so that's a little bit different. You're going to have new neighborhoods with new houses, and they're all going to be working at this plant. So you have these pockets of, I guess, excitement going on in some areas, which is good. But generally, you don't really have that, right? Because that's on the edge of town, north of Phoenix, on the way to Flagstaff. It is. I tell you what, it's remarkable. It's really something to see. It's really changing that whole north side of Phoenix right now. Everything, all the values, everything has gone up as a result of just that one decision.
Mm-hmm. Yep. And so they're always looking at that. So when people think, home builders are in a different position than homeowners. And what I mean by that is homeowners, they're stuck in these low rates. And if they are just living in their house, it's okay if it doesn't sell right away. They can just kind of sit on it. Or home builders, they're not going to build if it's not going to sell and they're going to make a profit. So that's going to be what's interesting to kind of follow as, this year progresses. But it is why they're pulling back, even though there is a need for housing, there might not be enough home buyers to make it make sense.
It'll be interesting to watch as these general contractors, start to build houses again. Because here's the reality. If, let's say you just pick 10 acres, 5 acres, 20 acres somewhere, 1 acre, and you build a house or multiple houses, you are competing with the house in the neighborhood next door. Presumably they're older, right? They could be 10 years, 20 years, 40, 50 years old. It doesn't really matter. But the reality is if the house price is, let's say, not that much different, 500, 600, 700, even 2, 3, 400, if you can build that low, you are now, you're going to have a massive advantage. If you can buy down the rate to buy something new, like in Danielle's case, where you have a neighborhood right next door that even if it's $100,000 less, the payment's the same to be new, right? Mm-hmm. That's a huge advantage. And so that's what's going on right now. And that has affected the sales. In fact, December sales for homes we're down significantly if you look at the last 5 years. So I don't know if that's an indicator moving forward, but what's really happening is the home builders are starting to realize that the cost of labor, the cost of construction, the cost of debt, the cost of land, and all that stuff, and then the takeout buyer, the homeowner, is not coming like it used to come, and so they're taking their foot off the gas.
So, what do you think that this means for prices and rentals and things like that?
I still think the same thing, and of course, this all is completely dependent on the market, the area, the submarket, and all that kind of stuff. So, but there's no, you can't argue the fact that homes used to be about $300,000 nationally in 2019, and now in 2025, actually early 26, they're $400,000. So they've gone up $100,000 in 5 to 6 years. Now, there's all kinds of reasons, but why would that happen? I mean, seriously, we had a pandemic during that, right? Like, how could you have a pandemic where everybody was sent home and you have $100,000 price run, right? Like, that's exactly what happened. That's the math, and you can't argue with that. So the reason is that we have a supply shortage. That's the reason. And of course, we had interest rates go down a lot during that period of time, which pushed the prices up. So the pandemic, think about that. Like, who was building during the pandemic? Right?
Yeah.
Who was buying? Who was renting? Right? All that stuff stopped. Yet we got this big price run. Why is that? Well, what happened was we lowered interest rates. If you
Big
remember.
time.
Yeah, big time. Okay, so policy drove, the prices out. That's what happened. So, and the reason is, and then when they ran out of product, the supply wasn't big enough. So this also happened in the GFC in 2008. There was 4 million homes on the market during that time. Right now, there's 1 million. Okay, just to put it in perspective, we're not even close. At that time, they were all bank owned, and there's a lot of inventory, and people were just going crazy. But once again, how do you move all that inventory? It's like anything. It's like like when last year's product or even last year's car, let's call it 2025 models, are being priced less than 2026. It's the same thing. So it's just when you have too much of something, you price it accordingly, and that's what's happening right now. So I still believe that we're severely undersupplied. And there's only two things that will actually get a homeowner into a home. One is to make the monthly affordable, and two is to lower prices. And lower prices are coming without a lot of new supply. That's the only way that prices will come down, because they're not going to come down. Labor costs are not going to come down. Construction costs are not going to come down. Maybe, yes, you'll have some interest rates come down. That could help a little bit. But trust me, a home builder, is not going to say, "Oh, our interest costs are lower, so we're gonna pass that on to the consumer." That's not going to happen. So, so these prices are set. I don't think we're going to see any relief anytime soon.
Well, the other thing that's interesting is that, if they pull back on building, which they will if they're not making any money, then
why would anyone build if there's no profit?
And that's going to hurt the supply even more.
Right, and it already has. Right, we've already seen this already. The people that owned land when rates went up in the last couple of years pulled back already, and so what we're seeing right now is the lag effect. So all the apartments that when you're seeing this rent relief, and we're flipping over to multifamily, of course, and a little bit of commercial, apartment building takes 18 months to build. That's not the same for a single family home, right? But the first time it takes us over a year to even open a clubhouse. Like you're actually on 10 to 20 acres, let's say. There's a time frame with that, and you're actually not leasing really until midway into the second year, and you're not really even leasing and stabilizing until year 3 or 4, perhaps, depending on the size. Very different for single family, where you can enter the market quickly, right? And you can build a house relatively fast, and depending on a number of factors. And so all that pulled back, though, the cost of capital, even for me and Ross, we pulled back. We're like, we have a bunch of land, but we're going to not build on it right now because it's 8 or 9% construction for construction debt, where, it's 3 or 4% higher than it was even just right during the pandemic or right before the pandemic. So that adds a lot, especially on a big multifamily project where the construction costs are 60, 70, 80, even $100 million. 2, 3, 4% is a lot.